Oil prices fall below $50 a barrel, and there's no telling when the decline is going to stop. But sub-Saharan net oil importers are yet to benefit. We shall look at why. Hello and thank you for joining us on Global Business as we bring you insights into the constantly changing business landscape of the continent. From Nairobi to Johannesburg, Cairo to Lagos, we shall be taking you directly to entrepreneurs that are hitting business headlines tonight. I am Penina Karibe in the Kenyan capital, Nairobi. It is 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Also coming up this half hour, Ethiopia to aggressively invest in its leather sector, and how Morocco is helping its small-scale farmers to navigate the perils of environmental change. Now, global oil markets tumbled further on Wednesday due to continued worries about a supply glut, pushing price levels down for 4 straight sessions. Brent hit $49.92 per barrel. That's the lowest since 2009. The first 2 days of the week saw the price fall by 10%. The crude briefly bounced up in Tuesday's session in response to weaker than expected U.S. economic data, but resumed a downward trend most of the day. The global oil sell-off began about 6 months ago because of growing U.S. shale crude and record high output from major oil-producing countries such as Russia and Iraq. Now, traders say crude prices may further ease to mid-40 levels, but could bounce up on the back of market sentiment.
I think $40 is quite possible. I think at this level, however, you're starting to get signs that some production is being taken out of the US. That might help to rebalance supply and demand somewhat. So I wouldn't be aggressively shorting oil at this level.
So taking into account lower global oil prices, Qatar's national carrier is set to reduce the cost of flying with the airline. The company's CEO, Akbar Al-Bakr, announced the Qatar Airways will cut the fuel surcharge that is added to passenger tickets in response to these falling oil prices, but won't really cut its base fares. The fuel surcharge makes up nearly 18% of the total fare on a one-way ticket, purchased a month in advance from Doha to London, according to its website. Qatar Airways did not specify when the reduction would kick in. Now, several Chinese airlines have already cut fuel surcharges in response to lower oil prices. So let's dig deeper into this matter, and for that I'm joined here in studio by Mwendia Nyaga. He's the CEO, Oil and Energy Services Limited. Thanks, Mr. Nyaga, for joining us. So your company is a key investor in oil exploration development. So what do these declining prices mean for you, for your company, and even other investors in this sector?
Now, for investors in this sector, the falling oil prices are not very good because declining oil prices will mean a reduction in investment in oil and gas exploration, especially for a country like Kenya and East Africa, where we are all at the exploration stage. And a reduction in the oil exploration budgets then mean that the companies which are doing business in oil and gas exploration will get less business.
Now, we obviously saw Tullow, which has already announced a reduction in its exploration budget in 2015. Should we expect more of such announcements? And I mean, at what point will it stop making sense to invest in this sector?
Now, first, for companies which are producing, like Tullow, it means that the reduced oil prices mean they are then getting much less revenues from the places where they're producing. Now, these announcements came at a time when the oil prices were somewhere around $70 a barrel. Now, as you have just mentioned, it has now gone to below $50 a barrel this week.
Right.
So it may then mean that companies are then getting much less revenue and may resort to further reduction in exploration budgets. We hope that will not affect Kenya and East Africa, but you cannot know.
Yeah, so in your estimation, how far down do you think the prices can get, and at what point should we expect an upturn?
The lowest oil prices have gone in the last 11 years is $33 a barrel. Once in April 2004 and again in around February 2009. Now, it's debatable whether this is likely to happen again. A lot of people are betting on $40 a barrel, but there are some analysts who suggest it could go to 30 or even lower.
Right.
So no one has the crystal ball here, Penina. So,
all right.
Yeah.
Let's get a perspective from South Africa. We bring in Sumitra Naidu. She joins us live from Johannesburg. So Sumitra, the rand fell again on Wednesday as a result of these falling oil prices and foreign investor exit from emerging market assets. What are the prospects for the South African economy, seeing that oil prices are unlikely to recover soon?
Well, Penina, the prospects looks mixed at this stage. As you said, the rand fell again. It was in line with other emerging currencies, but by far the worst currency decline on the day. Now, this weakness could be bad news for inflation going forward. However, the falling oil price is helping to offset the effects. And with inflation back within the 3 to 6% target band, it's unlikely that the Reserve Bank will hike rates anytime soon. But the significant drop in oil prices is putting some pressure on commodities. This is a concern as it could hit mineral exports revenue and in turn put more pressure on the country's deficit, which is already very big. We also saw today the Eurozone dipping into deflation. Figures out earlier showed the fall in energy prices as the biggest drag in the Eurozone inflation figures. If this negative inflation is prolonged, again, not good news for the South African economy, as Europe is one of our largest trading partners. We may just see some upside if the European Central Bank goes ahead with its quantitative easing plans.
All right, Sumitra, I shall be getting back to you in just a minute. Let me just come back to Mr. Nyaga here in studio. Kenya is a key net oil importer, and Kenyans are generally yet to enjoy the slump in these prices. I mean, they haven't enjoyed the relief yet. The pump prices are still high. The Kenyan shilling touched a 3-year low Wednesday. So what is the disconnect?
Well, first, low oil prices are good for consumers. So for net importing countries like Kenya, it's a good thing. It will lead to a saving in foreign currency that is spent in importation of oil. And so whereas that the Kenya shilling has been declining, it may actually benefit a bit from the reduction in the amount of dollars spent per barrel imported. However, the low exchange rate for the Kenya shilling then leads to more expensive oil prices at the pump. So this is eroding the declining crude oil prices. And therefore, the whole benefit of declining oil prices is not passing to the consumer because part of it is then spent in buying the more expensive dollar to pay for the supplies. However, having said that, the other reason that the Kenyan consumer may not be enjoying the full benefit of the oil prices that they have seen this week is because there's a bit of lag between when the crude oil prices fall and when that translates to the pump prices. You have to wait for this crude oil to go to the refinery, get refined, and then the refined products go to the pump. That's the time you start enjoying the lower prices at the pump.
Right.
So these would be expected maybe in a month or two from now.
Okay.
Yeah.
Well, Sumitra, coming to you there in South Africa, South Africa too should benefit from the declining prices of oil. Why are we not seeing this? I mean, is there any good coming out of these falling oil prices for South Africa?
Well, you know, with the economy, everything moves in cycles. At the moment, so far, it has been some good news for consumers. Fuel prices were cut this morning. It was the 5th decrease in petrol prices in the last year, and largely as a result of the falling oil price. And more cuts are expected in the coming months. Now, we expected to see these lower costs filter through to food prices. These are the two big costs for South Africans, food and transport. And we've already seen the lower prices ease inflation, and it's translated into more money in pocket, if you could say that, which economists hope will be an opportunity for South Africans to pay off their debt. Many are heavily indebted in this country, so this could be some improvement. Same for industry. Fuel costs have risen steadily up until, well, the middle of last year. So this is a big saving. But again, South Africa is part of the global economy, and if these oil prices continue to pressure other economies, we will feel the pain from that.
All right, Sumitra. So final question to you, Mr. Nyaga. The drop in oil prices this year obviously expected to bolster growth in sub-Saharan Africa from 4.5% to 5%. That's according to Fitch Ratings Agency. Do you agree with this?
Yes, I agree with it because lower oil prices lead to low cost of production. oil is used as source of energy and other raw materials for very many manufacturing processes and production processes and other economic systems. So low prices is certainly going to be beneficial to economies, not only in Africa, but in many other places in the world. Anyone who is a net importer is benefiting at this time, and the economy will benefit.
All right, so let's end it on that optimistic note. Thank you very much, Mr. Mwendi Anyaga, here with us in the studio, and Sumitra Naidu live for us in Johannesburg. Thank you as well for joining us. All right, so let's stay with a story that's moving markets around the world, oil. In Nigeria, Shell Petroleum Development Company, a subsidiary of oil giant Royal Dutch Shell, reached a settlement of $84 million with residents of border community in Rivers State in the Niger Delta. This follows 2 oil spills in the region in 2008. CCTV's Deji Badmas has more.
Lawyers for the 15,600 residents who took Shell to a London court say each of them would get $3,300, while the remaining $30 million will go to the community. This case has dragged for a very long time. The 2 massive spills date back to 2008. Shell had always accepted responsibility for it, but the sticking point until now had been the actual compensation package. The residents eventually dragged Shell to a London High Court after talks broke down in 2011, seeking a hefty compensation. But following intervention from several quarters, negotiation resumed, leading to the latest compensation package. Now, with this agreement, the case in the London court is likely to be dropped. But you can bet this settlement to have impact on other pollution claims against other oil companies in Nigeria. Deji Badmo, CCTV, Lagos, Nigeria.
Niger President Mahamadou Issoufou is on a 3-day visit in Benin to hold bilateral talks with his Beninese counterpart Yayi Boni. The heads of state have agreed to strengthen economic ties between their 2 countries. Last year, the 2 presidents jointly launched the construction of a railway line to connect their capital cities, Cotonou and Niamey. The rail link, which will cost $1.3 billion, is part of an ambitious West African rail loop plan to link the 2 countries to Ouagadougou in Burkina Faso and Abidjan in Cote d'Ivoire through 2,500 kilometers of rail track.
You know, we have an ambitious rail link project. We will discuss the possibility of a cooperation treaty for the construction of the entire West African rail loop. The second point of our agenda will focus on the management of the Benin-Niger corridor. Then there is a question of the management of the port, which is the natural way to Niger to have access to the sea. We'll also discuss the establishment of a permanent joint commission between Benin and Niger.
Let's turn to the markets now, and it was a mixed bag, with the Nigerian oil share maintaining a trend of major losses since the beginning of this week. The index shed 4.17%, but despite these negative numbers, some financial experts are predicting the Nigerian capital market will witness positive trends by the end of this year. Now, they say one of the key decisions and actions expected to shape market outlook and structure this year is the recapitalization exercise early announced by the Securities and Exchange Commission, the apex capital market regulator in Nigeria, so we'll definitely watch these numbers. Still ahead here on Global Biz, Ethiopia to aggressively invest in its leather sector, and Russian investors restore hope in reviving Zimbabwe's ailing beef industry.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Food security is a major challenge for most African nations, yet agriculture is a backbone of these economies. But with technologies like hydroponics, there is hope of food availability all year round.
You're watching Global Business. Welcome back. Now, Ethiopia has arguably the largest livestock herd in sub-Saharan Africa, with an estimated cattle population of 49 million. But the nation has not made commensurate returns from its leather industry. Semi-finished leather was the main export item, but now value-added finished leather products from Ethiopia are entering the global market, with exports soaring from year to year. CCTV's Groom Chala tells us more.
A market full of world-class leather products, shoes, jackets, gloves and more. The customers range from ordinary Ethiopians to foreigners residing in the nation. The prices are relatively cheap, but these customers know they are purchasing quality leather.
Comparing these products from what we used to have, these are soft and wearable. What we had before in the markets was not wearable in all weather conditions. I really love what we have now.
Well, the market has leather products which are up to date. And thanks to technological advancement, the products are getting better. Everything, especially the bags and jackets I've used, are very good.
In 2014, Ethiopia earned close to $226.9 million from exports of leather products. That is more than 15% growth compared to the same exports of the previous year. The export destinations are the US, some European nations, but largely it is China. This factory, for instance, produces industrial gloves for a foreign market. The investor Fikre Nagash says the export of leather products is becoming a lucrative business in Ethiopia.
The current export business is really encouraging for investors like me. I can say many of us are attracted by the encouragement the government is giving us. We used to operate locally, but now thanks to the land we have got in the Oromia region, we have opened a factory which produces leather products for the global market.
Producing different leather products in small factories like this one in Ethiopia is becoming a growing positive trend. However, comparing it with what the country can do, the industry is still at its infant stage.
These employees produce more than 1,500 leather gloves every day for the voracious global market.
The products we produce here have 100% quality. We follow the specifications and samples sent by the customers to come up with the best finished products.
Ethiopia expects even more from its leather industry, from the sector that exports value-added items. And so the industry is one of the 8 priority sectors outlined by the Ethiopian government in its growth and transformation plan, from which the government aims to collect $500 million in export revenue within the life of the ambitious plan. Grumtala, CCTV, Addis Ababa, Ethiopia.
Now, 2015 has gotten off to the best possible start for Zimbabwe's livestock farmers. Russia is keen on importing beef from the Southern African country, and is also planning investment in the manufacture of vaccines and medicines. Zimbabwe Agriculture Minister says a delegation from Russia will be in the country soon to explore the opportunities. Farim Mokutuya reports.
Zimbabwe has a strong pedigree in livestock production. Its beef was prized in the European Union, but over the last decade, a combination of disease and dwindling local capacity saw the country losing out on the lucrative markets. But now, Russian interest could signal the boost this battered sector has been looking for.
With the absence of markets, farmers were just keeping their cattle, and these cattle fell prey to diseases. And government had no capacity and still does not have enough capacity to vaccinate all the animals.
According to the agriculture minister, Russian investors are interested in setting up vaccine manufacturing plants, which would augment current government efforts to safeguard its 5.3 million national herd. Last year, Treasury disbursed $52 million to help more than 500,000 smallholder cattle farmers access vaccines. Following the land reform program in 1999, more than 90% of the cattle rearing is now done by communal farmers who need to be empowered more, according to their industry mouthpiece.
Government does not have cattle. Farmers have cattle. So instead of just providing the markets, farmers should have a stake in the whole business deal, in the whole business arrangement, so that they benefit not only from the primary sales of their animals, but also they benefit in the value chain.
A state-run cattle buying and beef processing company is currently grounded due to a lack of funds, and this could be one of the targets for investment if the Russian deals come through. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
All right, so let's take a quick check at the commodity prices. The price of Brent crude oil has fallen below $50 a barrel for the first time since May 2009. It fell more than $1 to $49.92 a barrel in early trading on Wednesday before edging back to above the $50 mark. And straight ahead, how Morocco is helping its small-scale farmers to navigate the perils of environmental change.
Having lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant, and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Almost half of Morocco's dates and a wealth of other foods are produced by small family farms. But environmental challenges and economic difficulties are making this traditional way of life a struggle. In Grassroots tonight, we look at a campaign that's underway to improve farming techniques and stimulate production.
In Morocco, oases cover over 100,000 kilometers of the country. These lands sustain the 1.7 million people who live here. The oasis of Zagora in Morocco's southeast can produce between 30,000 and 40,000 tons of dates every year. That's almost 40% of all the dates produced nationally. But life is tough for the small farmers. Haj Mohammed Yassin started farming here nearly 20 years ago, like his father and grandfather before him. The 57-year-old father of 8 works across 5 hectares of land where he grows mainly dates, oranges and henna. Recently he started growing watermelons like most of the farmers in the region. He uses 3 wells to irrigate his land, but he admits he isn't aware of the best farming techniques because he isn't sure which type of soil is best for growing watermelons.
The problem we face is that we work in a disorganized way. The local office of the Agriculture Ministry should have a laboratory so that we know exactly what kind of soil we have, so that we know what fertilizers we should use. We also want to know how much we should use for irrigation. The other problem we are facing is selling our products. Even when we have a harvest ready, we face problems when selling it.
Small cattle breeders are no better off. When drought hits, they have to buy animal fodder at very high prices, which reduces their profit margin when they sell their sheep and goats.
This year, it rained and the animals can graze, but some of them are sick with a disease called bone husk, and we badly need a veterinary doctor to treat our cattle.
Family farmers work 90% of the land inside oases. The government's Agriculture and Fisheries Minister set up the Green Plan in 2009. It's a blueprint to expand farming in Morocco by 2020, boosting production and exports overseas. The state intervenes by allocating funds to farmers who adopt modern farming techniques. Aziza Kunush, Minister for Agriculture and Fisheries, is behind the plan. He's in Zagora to launch a series of new initiatives, including a campaign to encourage palm tree planting.
This farming has a poor yield, mainly when it comes to cereals. In the future, it should be changed to fruit trees such as palm tree, almond trees, and olive trees. We are working on changing this family farming into a farming with higher production. The state will help and give all means to the farmers because he remains a small producer who needs help and assistance.
This scheme has already been successful, mainly among women, but cash alone can't solve all the problems facing farmers. Farmers like Haj Mohammed Yassin say they need to be taught modern ways to boost production and yield. Voldikarosa, CCTV.
A quick look at the currencies now. Kenya's shilling weakened Wednesday to lows last seen more than 3 years ago, while the benchmark share index posted a second straight day of slight gains. Now, traders said investors were not keen on risky assets after the dollar strengthened against other currencies, and others said the weakening of the shilling below the psychologically important level of 91 per dollar could usher in further weakness. At the close of trade Wednesday, the shilling stood at 91.05 to the dollar. On Global Business tomorrow, we'll look at progress by the International Cocoa Quarantine Centre in the UK to develop disease-resistant cocoa varieties for West Africa. We'll also be looking at how South Africa's power supplier, Eskom, plans to cope with heightened power demand next week as more businesses open after the holidays. Also, that's it for this edition of Global Business. Do send your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I am Penina Karibe, and thanks for your company.